And good afternoon, financial professionals. My name is John Florence. I am Senior Vice President of Marketing here at E4 Insurance Services, welcoming you once again to the BREW, where we build relationships every week. On today's BREW, we're welcoming Dan Peterson and Brendon DeRouin, managing partners at E4 Insurance Services. And they're going to be here today bringing us all up to speed with what's happening in the world of asset and financial security. Before we get to today's questions, I'd like to remind everybody that you can feel free to use the chat box to share your thoughts or ask any questions. And also, all of our attendees today are in a drawing for a CE voucher and a Starbucks gift card, which will be announcing the winner at the end of today's call. So thanks for tuning in. Gentlemen, welcome back to the BREW. It's about every 3 months or so we get to do this meeting, and it's always kind of a joy to do it, and looking forward to hearing what you all have to share with us about what's been going on in the past 3 months and what you anticipate for the remainder of the year. Dan, I'd like to start with you. Let's talk a little bit about E4's growth. I know this has been a topic. There have been some awards that were given to us in recent months. Tell us what's going on on the growth front.
Well, we've continued to see a tremendous amount of growth as we've began to work, I think, digging deeper with our existing relationships, finding new opportunities to do that, building our team. This year, John, from our strategic planning, we're really focused on creating that consistent, positive advisor experience and really working to do that in a better way. We're seeing growth in a number of areas, from, I think, the multi-life, the guaranteed issue is assisting with our growth, the instant issue term insurance that has been available. Obviously, we've got some tailwinds with the interest rates increasing, and that has been huge. Year to date, we have issued over 1,000 more applications this year than we did year to date last year. So a 63% increase in applications processed and issued. That's not submitted. That's through the system and in force. So a lot more financial security and has been created with that, and that's been a really exciting thing. I think our team has handled that growth well, and we've made a number of investments in technology to be able to support us in our growth, and that's paying off as well.
Yeah, awesome. You mentioned interest rates, and we were aware that the Fed keeps raising them, and that is having knock-on effects for us in our business and maybe helping with some of the growth. Share a little bit more about that and some of the success stories that you've seen tied to interest rates. I know you were mentioning something about a 6% on an annuity. Tell me about that.
Yeah, John, my past life, before going into independent distribution, I was in the home office. I was the marketing officer, chief marketing officer for Clarica US. In 2001, I remember we had some pretty good investments that our investment team came up with that we could match, and we offered a 6% MIGA, 6% for 6 years, 6 plus 6, and I probably kept that product in 2001 1 month too long, and we got buried with applications, and then we had to cut rates because of that, and it really. I can remember stacks of applications sitting. This was before electronic forms in boxes in the hallway, and it really caused a big challenge for us back at the insurance company level. But I haven't seen 6%. I don't know about you, but I haven't seen 6% in 22 years. It's been a long time since then. But yes, we just saw this month. We've got an application that's in transfer right now, 6% on a $6 million. The clients wanted to live off the interest, and they were able to lock in 6% for 10 years and create a tremendous amount of certainty in their portfolio for their income for the next 10 years, and then have other investments that are on top of that. Now, that's not an everyday client with $6 million to put into a 10-year annuity, but it just shows you the interest rate and the power that can do in an investment situation where you can take a lot of pressure off of the other investments that you see out there.
That's right. Brendan, Dan was talking a little bit about some the growth as well, and he mentioned both an increase in the multi-life and the disability side. Can you comment on that? What's driving that, and what are you seeing along those fronts?
Yeah, we're seeing, great success in that. Part of it is as we're still having a high employment rate, we have a competitive job market out there. And, you know, despite the Fed's efforts to slow our economy down, it hasn't happened yet. And therefore, businesses that are doing well, and they want to keep doing well. And how do they retain those top employees? Well, executive benefits is one of the great ways to do that. You can offer an employee more money, but that's very easy for the competitor to say, all right, what are you making? I can match that. Where when you have a bevy of other solutions and benefits for that advisor, it makes it harder for them to say, well, yeah, we're going to add, a executive, life policy and DI to you that has guaranteed issue. They can't just match that. So we've found that, along with some deferred compensation strategies, really is helping protect, these companies from losing employees and keep their top performers, on the books, and give your asymmetrical performers an asymmetrical benefit compared to, just the group life of everybody getting 50,000. If you're making 50,000 a year, $50,000 benefits meaningful. If you're making 500,000 a year, 50,000 doesn't necessarily do it. So
Yeah.
we're seeing great success there. And I guess in concert with that, with bringing out our DI, we've been able to talk about group, executive carve out DI, and that has just come right alongside what we're doing on the life side, and it's been a match made.
Well, these are newer conversations that a lot of our advisors that are working with us are having. What resources can E4 offer the advisor who maybe isn't comfortable yet, even bringing up that conversation and knowing how to navigate that kind of a solution for a client? What can we offer them?
Well, we have a team of RVPs that are only too happy to help. And one of our mottos is that, we'll support you. That's the traditional brokerage, method. We'll help, handle your life policy from submission to commission, but we'll also do it with you, or, in some cases we can do it for you. So depending on how much, help and support you need, we can do it with you. We can do it for you. And, educate our advisors, on this process and how to do it. One thing I would say is it may seem foreign and strange and different. On a lot of levels, it is easier than traditional business because A, there's no underwriting, which we know often can be a concern. And then two, you've got the corporate checkbook. So when you're using the corporate checkbook, it doesn't hurt quite as much as that personal checkbook. So, our advisors that are having success really like this space for those two reasons.
Awesome. Dan, let's come back to you for a moment. I know your strategic management or strategic planning team got together not too long ago and sat down for a couple of days to map out the future, sort of the next 1 to 3 years in E4's life. And one of the things that I think came out of that is a refining of what it is that we do as a business. And you were mentioning or talking about that there are really 4 kind of key things that E4 is really doing for its clients now. Can you talk about that a little bit?
Yeah, and I think we've, as we go through it, we've really looked at those 4 basic areas of that we're focused in laser-like on our business. The first is in the area of protecting income. What's the plan if you die too soon, right? You have income that stops all of a sudden and drops, and the expenses for a family, for an individual continue. So what's the plan to provide that income going forward? And that's where life insurance obviously comes in. What's the plan if your income is reduced because of you're too sick or hurt and you can't work? What is the plan for that? And of course, we've added our disability income line with Brady Serold, our Senior Vice President of Disability, on board, and we're really seeing good conversations and growth there. What's the plan, as Shane Van Patten on our team, who's really a long-term care planning expert, what's the plan if your income stays the same, but your expenses go up due to a growing old or sick and frail, and you need assistance, or as he calls it, the new $8,000 a month gym membership that you have to pay for. So what's the plan there? And our long-term care solutions, both on life and annuities, really do that. And then what's the plan to protect income in your retirement years so that you don't run out of income and protect that investment portfolio? So really focusing on those protection of income to create certainty in the financial planning. Obviously, the other things we do are provide liquidity at different life events or business events, buy-sell planning, liquidity for estate taxes. Those are things that we do, and we do very, very well. Protecting investment portfolios against the downsides of the market and risk in the market, and creating certainty in the income that can come from an investment portfolio. Those are all things that we're really focused on. And then the last is providing retention and reward strategies for employers to keep those peak performers, tie them into the organization, and really lock them into a great employment situation where they have certainty and they maintain those relationships. So we've really focused on how do we support that? What are we doing to do that? And that's been a big part of our discussion about going forward.
Exciting. That's an awful lot of things to talk about. Brendon, one of the things that E4 has really focused on strategically is this idea of the importance of us getting out and being face to face with advisors. And as an example of that, we just did for the first time up in the Fargo Moorhead area a one-day sort of symposium for financial security that we called Savvy Advisor Solutions. Tell us about that experience. You know, it was our first time doing it. You know, what happened and how did it go?
Yeah, be happy to, John. And I just want to comment on what Dan said and really more your post comment that's a lot of things to focus on. But and I agree, it is a lot, but they are all pertinent and important in protecting, financial households. And, I think if we don't offer, those 4 solutions that our advisors need to, we're, really doing a disservice. So in truly protecting, clients' well-being, we need to have the 4. So yes, it's a lot, but it's still important.
Covering all the bases.
You got it. So yeah, we just finished up the Savvy Advisor Solutions at the Fargo Air Museum, and it was, an outstanding success. We've been doing something similar in Wisconsin that we've, called the BBT, or Building Business Together, and had years to, I guess, build up our attendance and following. So we were unsure, how that would, I guess, be attended, especially with, the Fargo Moorhead area being lower in population. But we had over 50 advisors there with, everybody. I think we got close to 70 people. It was a great venue at the Air Museum. We tied in our keynote speaker, who was a recently retired pilot. His call sign is Animal, but Dan Jaworczyk, and he talked about how,
not just a pilot, a test pilot, PhD. Yes. Yeah.
Amazing individual. Just finished up, incorporating AI in, study into how that would, work with the Air Force. Talked about, how AI will come into financial professionals field. So it was great. We also had closed the day with a panel of attorneys talking about, the upcoming, estate tax changes and, what they're doing. And that was really great. I was talking the other day to the Madison Estate Planning Council, and they mentioned, well, it's great to get, the attorney's perspective, but, what about the advisors? And I said, well, what the attorneys are saying is the advisors need to motivate their clients to take action today, because they're going to run out of time. They know, the time it takes to implement things, and waiting until, the fourth quarter of 2025 to implement these changes isn't going to work, and they aren't going to see clients for that. So I would reiterate to our advisors out there, if you've got clients that may need to make changes in their estate plan, do so without haste.
Sounds like it was a really.
I think you mean
okay.
with haste.
Oh, yes.
Post haste.
Post
Do it
haste.
quickly. Do it quickly. Do it now.
Yes.
Well, thanks for sharing that. It sounds like a great program, and we'll look forward to putting it on again next year. So be on the lookout if you're watching this program for next fall. We'll do a repeat or a new edition of it, we should say. Dan, we're running out of time here today, but I didn't want to finish up this session without talking about a new partnership that E4 has been talking about with many of its advisors. And I'm going to put this up here on the screen so that you can address it. But there is a document that we put out, and through our affiliation with Libra, we now have a partnership in place with RGA. Tell us, what is RGA and what does this mean to our advisors? Why should this be important to them?
Well, RGA is one of the largest reinsurers, and as most of you, if you're familiar with life insurance underwriting, insurance carriers utilize reinsurance to offload risk and to improve pricing of their products, to allow them to spread that risk on policies so that they have efficiencies. So depending on the size of the company, they'll use reinsurance in different ways. In my 35+ year career, it was always the last thing you wanted to hear was that, well, I guess our offer is this at the direct writer, but we can try to go out to the reinsurance market and see what they'll do. But that always meant in the past, John, that they pulled their offer when they did that all bets were off, and we were totally then dependent on the reinsurance offer. What we have today is in our new partnership with RGA is we have 9 of our carriers that actually we can go to the reinsurer first, and we can get an underwriting offer on the files that our team builds, our new business team, and we're seeing offers turned around in 24 hours, and then the 9 carriers that you see listed there will actually accept the reinsurer's offer. We can bind their coverage and submit applications. So Allianz, Cincinnati Life, Columbus Life, Mass Mutual, National Life, Nationwide Protective Security, and Security Mutual. All of them are participating in this, and we're seeing really outstanding results from it. They do have some niche impairments that they focus on, morbidity. When you have multiple things going on, the liver functions has been well received, cardiac impairments, they can be aggressive in that. So all that said, is I think this partnership is something in the fourth quarter we're really looking to see even more business placed under this program. It's available up to $8 million of face amount. I think we may even see an expansion of that up to $10 million next year because it's been going well. And, it's something that we're going to be bringing to advisors when they work with us. We believe that they'll see faster turnaround, better underwriting results with our ability to go to the reinsurer first, even before we go to the direct writer. So.
Can you give me an example of maybe recently or a case that you've had where this partnership has come into play, and how should an advisor be thinking about this? When would this partnership come into play?
Well, I think Brendon has an example of a case that was declined by a carrier that's on this list.
So I often find, and this isn't absolute, but carriers either have competitive product or competitive underwriting. Rarely do you find them aggressive in both. And, with this RGA ability, we can go to a carrier that has a competitive product. And if their underwriting, isn't competitive, in this case, they decided to decline the case. We went to RGA, got a standard. They had the most competitive product by far. And at standard, it was a great combination. So, I pushed back on the underwriter and our VP at the carrier and said, please, can you reconsider your decline? They came back and said, no, we're firm on that. And so then we went out to RGA, got a standard offer, and I responded, great, you won the case. Well, we declined. Well, you did, RGA didn't. So you still got the case despite your best efforts. So, I mean, that is just a game changer in our industry to have, the ability to have effectively two different underwriters look at a case that are not at the same company, but have the same paper.
Well, and I know that, particularly with some of these types of impairment cases, that sometimes it can take weeks, if not months, to be able to get an answer. Talk about the speed at which these kinds of decisions are being made. It seems to be one of the great advantages.
Well, with our ability to, build the file, our underwriter, Tracy, to take that file, create a healthcare synopsis or health underwriting synopsis, I should say, on the medical history that is in the APS, and we send that over to RGA, and within 24 hours, we know their offer based on that. So it's incredible. We also have the capability to E4 to also do the exam even up front, and we do that on some of the larger cases. So we have labs and everything else. But if all we're doing is summarizing medical records, then obviously their offer is contingent on the final underwriting requirements. But we can even remove that piece of it. But yeah, it's 24-hour turnaround.
Sounds just like another way in which we are helping to create better outcomes for clients and the advisors that are working with them.
Yeah, now it's not 24-hour turnaround to gather medical records from medical facilities, John. So I do want to set proper expectations that once we have the file built, it's really fast turnaround. Where you don't get that with many of the insurance direct writers, their process can be much slower.
Once the artificial intelligence overlords take over, we'll have medical records in about 5 minutes. So don't you worry. That's right around the corner.
I'm sure it is.
Folks, just kidding. We've run out of time for today. Thank you guys so much. But before we go, let me just ask either one of you or both of you any words that you'd like to share with our audience.
Well, fourth quarter is historically our most productive and fruitful quarter. So we hope to keep that the same this year, even off of aggressive growth. So anything we can do to help advisors, we're here to help, and don't let off the gas, because 2023 is a good year.
And I would say, obviously, John, we couldn't do this without the really fine organizations that we work with, from the advisors that work in the wires, to the benefit agencies, to accounting firms, to independent financial advisors and broker dealers and RIAs. As we continue to work with those quality people who really care and are passionate about creating great plans for their clients, that's been a big part of the success, and we look forward to continuing that strong fourth quarter and into 2024. And then our team, the team that we have at E4 that has been able to process over 63% more applications this year than last year, and the way that they can deliver, and our business development people that are out there making that introduction to concepts and ideas, we couldn't do it without them either. So really appreciate that. And lastly, our carrier partners, as we've grown in size and scope, they've come alongside us and are really a part of that solution as well. So.
Well, and on that note, we will have to end it for the day. We thank you both for your being here on the show today and for the comments, and we'll call it a wrap for there. Just as a reminder, next week on the BREW, we will be joined by Doug Twitty, who is E4's Director of Annuities. He's going to be giving us a little bit of a deep dive on the implementation of the Firelight Annuity e-application system, as well as sharing some great ideas to help you finish your year strong and towards the end of 2023. Thank you all for joining us today, and we'll see you again next week on the BREW.
Thank you.